What I'm going to show you now is important both for options traders and for anyone using any sort of trading strategy, and it's seasonality. Now, it's important for option traders because we ultimately have to choose an expiration date. And what we want to do in most cases is put that expiration date a little bit beyond where the seasonality starts to fail. Now, what I mean by that is, let's say we have a thesis on QQQ. We think it's going to go up during the month. For the next 30 days, it's going to move upward. Well, in that case, we want to eliminate the strike prices that are shorter than a month's time. So we'd start looking at the August 4th, and then we'd go out and look at other ones afterward. Now, the reason for that is we generally want to capture the entire seasonality of the trade. How do you know the seasonality? That's the hardest part. And if you don't have the ability to code it yourself, for example, this is code that I typed up and I just put in the ticker, and it points out what happens in each month. So it gives us the percentage of it being up or down. It gives us a Sharpe ratio, the min drawdown, average gains, and I can change the date as well. I will in the future be making this algorithm available, but because it's all coded, I'm going to have to work around getting it so that you don't have to know code to work it. But in the meantime, I'm going to say there's one way, there's two ways actually. There's one way that's free to get this information, and you just go directly to Seeking Alpha and follow me. What I'm going to be doing, and because of this course, I'm going to start doing this. Every month I'm going to put out a seasonality report, so you know which are the main sectors that are starting their bullish or bearish seasons. So I just submitted an article for June 2017 to Seeking Alpha. You should be able to see that if you go to Seeking Alpha, type my name, and then type in June. You'll be able to see that. It's not public yet, but it will be by the time you watch this course. Other than that, you can sign up for Copy My Trades, and within Copy My Trades, I will consistently be mentioning the seasonality. And when I do that, I'm actually mentioning not just monthly seasonality, but also weekly seasonality. Now, if you don't want to sign up for Copy My Trades, a good way to figure out the weekly seasonality is by the economic calendar. Now, I prefer Market Watches because it has the actual forecasts and the numbers and what we had last quarter or last report. So that's from last week, and then the upcoming week, here's what we got. A lot of these will have strong influences on whatever you're holding, whatever you're planning on trading, certain sectors, and so on. So you want to be aware of these so that you can play at the right time. For example, if you believe that factory orders are going to shoot up, well, what you could do is get a long position in the Dow Industrial ETF, DIA, if you wanted to, and ride that seasonality until you see something that looks, or that you're predicting to be bearish. I do that all the time, not as the pure strategy for my trade, but I do it so that my other trades, the ones I have separate strategies for, are in line with the seasonality, so that we're kind of going with the flow. So I do that for the monthly. I always check the monthly seasonality here, and then I go and drill down the weeklies, and I trade with the flow. So you're going to want to do that too, and it's especially important for option traders, as I mentioned, because that's going to help you determine where you put your expiration dates when you're selecting options.